The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good day, money masters and treasure hunters. Welcome to the February 3rd terrific Tuesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and hope that you're off to a great start of your day. Let's make sure that you and I, that we do all that we can do to have an extraordinary Tuesday. And of course, let's always remember that what's talked about is a dream. What's envisioned, well, is darn right exciting. Of course, what's planned becomes possible, but what's scheduled is real. And I want to thank you for scheduling your time with me here this morning. I'm absolutely here to serve you, so feel free. Give me a call at 877-927-6648 or internationally at 727-445-1044. Remember, if you've got a question, someone else has got that exact same question. So don't do it for yourself. Don't do it for me. Let's do it for somebody else. A random act of kindness. That is the way to live. This is Terrific Tuesday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show right now. Dow is up 168 points. It's trading out at 17,528. S&P is up 15 points, trading at 2,036. Composite up 21 points. It's trading at 46.97. Russell 2000 is up 15 points, trading at 11.90. DAX up 84 points. FTSE up 86. Gold is back $11. Silver's up 3 pennies. Light sweet crude is trading at $51 even, Steven, up $1.44. Leading the charge to the upside out here is Jones Lang LaSalle. Dollar-wise, up $11.89. That's up 8%. Priceline's up about $9. Netflix up $8. Core Laboratories up $6. LinkedIn up $5. SS&C Technologies up $5. Eaton Corp up $5. BlackRock up $4. To the downside out here, Stratasys, big, hard to the downside, 33%, off $26 and change. You've got Regeneron Pharmaceuticals down $6.86. That's up 1 0.6%. Down 16% this morning. Rent-A-Center Inc. That's off 5.70. Mallinckrodt Publications, I think that's how you properly say it. That's down 4.5%, 5%. That's off $5. Agios Pharmaceuticals off $4.50. ISIS Pharmaceuticals down $4 out here. Bluebird Biotech off $3.73. All right, so where are we going to begin? Okay. Let's first start off and take a look at the ETF structures. Let's go take a look at the Dow Diamonds first. We start off taking a look at the Dow Diamonds. What we know about the Dow is the following. Number one, yesterday it completed very close to completing a 1-to-1 A to B equals CD to the downside. The actual completion point would have been 169.55. Yesterday's low, 170.10. Close enough for our work. What we don't know that's more important, though, than the A to B equals CD pattern is the mere fact of what happened at the test of the December 16th swing point. That swing point had volume of... Where is the volume? It's disappeared from my screen. That's blasphemy. How can that be out here? Oh, I just didn't have it turned on. There we go. Now we've got it turned on. Let's get this stuff turned on, for goodness sakes, out here. How else can I help you to call a market? Okay, so now what we know is the volume we were looking at was 12.2 million shares. Yesterday was a test of that with 9.4 million shares. The Dow Diamonds have been moving into that swing point with light volume for quite a period of time out there. Not enough sellers to bust it down. So we have a failure on both price and volume inside the Dow Diamonds yesterday. Gapping up today, that's a strong move. Volume so far behind the move, 1.8 million shares. What's the next swing point that it's dealing with? Well, it's already trading inside it, and that is the January 26th level, 9.5 million shares. I don't know. We've been trading for 40 minutes. What the volume is going to be like at the end of the day, whether it's going to keep up, whether it's going to wane. I just don't know what it's going to do any more than you do. But if price closes inside 174.51, even if it's on light volume, you're only up inside that with another 7 cents this morning. Says it ought to go at least test those highs. If you're moving into that level with some volume, more than 9.5 million shares, then that says you're going to go test the high of that, 178.14, maybe even take it out. What do we know about this market here? What we know about this market, and these are the most difficult markets of all, is really what we're dealing with here is sideways consolidations moves out here. Here's your sideways consolidation pattern that's been in place since October the 31st out here. And what you want to do is you want to buy bottoms and maybe sell the tops if price can get up there. What you really want to do, though, if that is the case, you want to take a look at swing points as price is moving up into that area. What do we know about the Dow Diamonds? It tested the swing point, did it with lighter volume, rejected that area, says that on a continued move higher, that the next real decision could come when price gets up towards that December 26th level in the 180-ish area. We'll see how things play out inside of the Dow Diamonds. If we go take a look at the SPY out here, the SPY up right now with 23 million shares, up $1.49. What did the SPYs do yesterday? Well, really the exact same thing. The low of December 16th with 259 million shares. The low was 197.86. That happens to match yesterday's low exactly, 197.86. We're going to say that qualifies as a test of that swing point. It was Johnny on the spot. It was right to the penny out there. A rejection with 163 million shares versus 259. Not enough to bust it down. Now what you've got inside the SPY, and what the SPY needs to do today in order to remain bullish to consolidation oriented, is close above 202.40. You're trading at 203.32. Why 202.40? Really simply because that's the swing point high. That's the swing point high from December 16th. The price closes back inside there, it will not have done anything, will not have proven anything to us out here. So if it can close above that, then it says, all right, what's the next thing? Well, the next thing ends up becoming the swing point here from January 22nd. 174 million shares. So far, you've done 23 million shares. Pretty good volume for 45 minutes of trading. You know, that would say you're coming into that swing point with similar type of volume out there. Any close inside 202.33 says a run to 206.26 is likely. That's inside of the SPY. If we take a look at the QQQ ETF out here, the Qs, what did they do yesterday? Guess what? They tested the December 16th swing point low with 65 million shares. Yesterday, they tested it with 43 million shares. Lighter by, 40% or so. Not enough to bust it down. So now, what are the Qs doing? Well, what the Qs haven't done here just yet, and this is maybe troublesome for the bulls, is they have not gotten above the December 16th swing point high. That's at 102.47. The Qs need to clear that swing point. If the Qs do not close above 102.47 today, that says you can run back down and test those lows again. So that's what's going on inside of the ETF structures. We'll go take a look at the IWM. Qs, I think, are very important to be paying attention to. Qs and the IWM, they probably give us the better signal with regard to, is this a more sideways consolidation chop, or is this a move at least to go test the top of those consolidation levels out there? So watch the price point today inside of the QQQ of 102.47. Yesterday, we know we had a test on lighter volume of a swing point, not enough to bust it down. The question is, can at least clear that swing point today? I do not know the answer to that, but I do know what it is that we need to take a look at. Let's go take a look at the Russell 2000, the IWM. Nice little hammer candle yesterday. This is a daily chart. If we take a look at its swing point, it only tested the top of the swing point from December 16th. That swing point nonetheless had 62 million shares, and yesterday was a test of that area with 44 million shares. Not enough. That's also, so we have 4 clear rejections of lower price inside each of those ETFs. All of them. 3 we had tests of the lows, and the IWM a test of the high. All are rejections. Now, in the case of the IWM yesterday closed above the high of that December 16th level. Now what they've done, you've gapped up this morning, a nice hammer candle. That says, hey, it's trying to hammer out a bottom out here. Now what it's done, it's traveled into, it's trading at 118.24 or so. The TAS market profile high is 118.35. Another way of saying that's resistance. A close above that would be bullish, but still sideways consolidation inside of all of these. The actual swing point looks like it's probably inside the IWM. Maybe it's January 20th. Let's see, 119.45, 119.25. Yeah, 119.45. So that's the trading session of January 28th. That had 38 million shares. Now you're moving up into it with 10 million shares already. Now, volume could just totally drop off. I don't know what it's going to do. But the Russell 2000 is saying, hey, I'm going to go test those highs. Those highs being 119.45, and it appears to have the volume behind the move here this morning as we speak. So that's what's going on inside of those four significant ETFs out here. We've got the ES Mini trading out of 2028, 2027. Really, the next key test out here is going to be on the pullback. What happens at the 2026 level? Do we see price? So we know about the ES Mini moved higher during that the first 30-minute open with volume of 220,000 shares. Not too bad. It did 245,000 contracts, I should say. It did that coming between the 3:30 and 4 o'clock time frame. 2:30 and 3 o'clock time frame yesterday, when price really broke through its descending price channel. So now the pullback so far, 102,000 contracts. So it was up with 120, down with 102, about the same kind of volume coming to the backside. So now what we really want to focus on from the bullish or the bearish side out here is going to be what happens at the, come on, when did you do this? Delete this. Why isn't it deleting? There we go. Is what happens at this 2026 level. Does it get tested and rejected and then it move higher? If it does that, that would be a very bullish move. Coming back and failing at the 2026 level, that says too much exuberance out there, and start of a hangover. Take some aspirin. And in these markets where we've seen a sideways consolidation chop, one day does not make a bullish move, nor does one day make a bearish move out here. We need to string them together. What we do know is just simply that yesterday we saw rejections of swing points with lighter volume. In fact, let's go dig into the S&P 500. Let's go check out some of the sectors and see how they are behaving, or maybe they're misbehaving out here. That I do not know, but let's go take a look at the technology sector. The XLK, 1.3 million shares to the upside, up with 23 cents as we speak right now. The XLK, the numero uno waiting inside of the S&P 500. What did it do yesterday? Well, I believe it tested a swing point with volume, not with light volume. That's December 16th. That was 15.6 million shares, and yesterday 15.6 million shares. So the same volume out there, not really lighter volume, but the same volume. Still a rejection of that swing point. You are not trading above it. Swing point meaning December 16th. So the key to be watching inside the XLK, in my opinion, today is 40.81. What we have seen so far is an intra-session high of 40.72. You want to see it from the bullish side, close above 40.81. From the bearish side, close inside 40.81 level, with this being the number one sector inside of the S&P 500. Let's take a look at sector number 2. That would be the financial sector, the XLF. What did the XLF do here? The XLF yesterday was really testing its swing point, which happens to be January 16th out here. That January 16th swing point had 72 million shares. Yesterday's test, 51 million shares. That is the number 2. What we ought to take a look at is this descending price channel that has formed out here. I'll go ahead and I'll fill in those blanks while we go to our first commercial breakout here, and then we get back, we can go take a look at it. Looks like it's trying to break that. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 175 points right now, trading out at 17,536. As we went into that break, we were looking at the financial sector, the XLF. Let's go back to it. What I've drawn out here, if we take a look at the high from December 31st out here, I closed at 24.73, but it had opened at about 25.12. The open was actually 25.10. And if we just go ahead and use the top of that candlestick, and then use really the top of the session from January 23rd, you can easily use the top of that one, or January 22nd. You're going to see that creates our little descending price channel. Now, what the XLF is trying to do today, we won't know until the session closes. It's trying to break through that descending price channel. It's trying to break its trend out here. Now, volume here. Now, what we also know about the XLF is it went ahead and completed an A to B equals CD pattern. That A point comes back to, we'll call it the December 31st high out there. There's your A point. Your B point was down here on January 6th. Your C point was up here, looks like, on January 9th. This made a 1-to-1 A to B equals CD. Nice big bullish engulfing candle. That was back on January 16th. Those lows basically have been tested. They've been rejected. Again, it was rejected yesterday, January 16th. Had done, the XLF had done 72 million shares versus yesterday a test of that area with 51 million shares. So we know we've got a completed A to B equals CD pattern. Now, that pattern, what that sets up is at a minimum a 0.382 retracement level. Well, if we take a look at the coming off of the highs from December 31st down to yesterday's lows, at a minimum what the XLF ought to do is get to 2374. That's your dead cat bounce, your 0.382 retracement. If it closes above that descending price channel, it ought to be able to do that. In fact, what it ought to really be able to do is probably get up to the 24, 27-ish type area. That's your 0.618 retracement. So that's going on inside the XLF. That is the number, I believe it's number two or number three weighting inside of the S&P 500. Let's take a look at the number 2 or number 3. It's either the XLF or XLV. The XLV out here, yesterday, what did it do? Formed a hammer candle. So it formed a hammer candle in testing the swing point low from December 16th. Now, that low out there had volume of 14 million shares, and yesterday was a test with 18 million shares. Nonetheless, it was moving in there with volume, formed a hammer candle out here. Today, when you move into a swing point with volume, it says you can get back down there. That's why we're seeing some weakness inside. I would assume that's why we're seeing some weakness inside some of those biotech names, some of which may be a part of the XLV out there. I don't know whether they are or they aren't. What we do know is that yesterday's low is pretty important. But if you break below that hammer candle or close below it, which was, by the way, 68.44, it says you could find support down at December 16th. It'll really be a volume picture, but that should be just a little troublesome for the bulls out there, because yesterday you had one of the top 3 sectors moving down into a swing point with volume. The benefit is that you finally, at the end of the day, it was the bulls who really won the game, and they gave us that nice hammer candle. It says that consolidation could continue out here. Choppy markets are the ones that you first want to identify, and oftentimes one you want to get out of the way of. You want to see a break of those consolidations. You want to buy the bottom, sell the top. That's really your best way. Otherwise, it's a lot of chop, chop, fizz, fizz, and it ain't no relief. It is. If we take a look at the XLE, the energy sector out here, you got 13 million shares today, gapping up out here. Let's go see what the energy sector is doing. Now, the energy sector, that had already rejected lows. Those lows were December 16th. That had 57 million shares. We rejected with 52 million shares back on January 14th out here. So yesterday was really a whole lot of nothing when it comes to the XLE. What we know about the XLE out here is that it's got this, I don't know what that red line, maybe a longer term. Let me put this on here, monthly chart for the XLE. Let me see what that red line, if I've got a red line somewhere, it must have some. Okay, so that's the short-term trend that it broke coming off of the 2009 level. So the XLE broke that trend. So the real key here inside the XLE, inside the energy sector, is going to be getting above that red line out there. Now that we know what it is, let's go back to the daily chart out here in the energy sector. So that red line drawn in the sand is right around, well, what's nice is right around these swing points here from December 29th. So a key level for us to be watching, probably about $81 even, Steven. You're trading at 79.45. Volume out there was 18 million shares. Hey, guess what? Now, that was December 29th. Light volume trading sessions out there, 18.14 on the 26th. How about a real trading session? About 33 million shares out there. That's back on December the 2nd out here. 51 on December 1st. So, the other area of resistance is going to be, we'll just use November 28th. That's probably the best number to use out there because of that gap down. So that had 42 million shares. But we've been trading for 1 hour, 13 million shares. Straight line mass says you're coming into that level with volume. The low, which has not been hit, the low of that is 79.58. So close above 79.58. That red line will be hit, today, tomorrow, the next day. Steve Rhodes, TFNN. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 187 points right now. S&P up 16. NASDAQ Composite up 19. Now, one of the things what I'm going to put up here, I'm going to show you on the screen, is you've got three different windows out here. We've got the New York Stock Exchange, that's on the left-hand side. You've got the NASDAQ Composite in the center and the Dow on the right. If you focus and you pay attention, let me see if I can move this up here. So I move that line so it's kind of even, Steve, get them all even. That might make things a little bit, that might make a whole lot of sense out there. Let's see if I get these, that one. Okay, let's do this. Because we're going to focus on here. Just trying to dress this up, make it a little bit easier, especially if you're listening on, oh, now what did I do? I got to move this all the way down. Move this down. Should have done some of this housekeeping a little bit earlier, huh? You guys don't want to see me do all my artwork here? Okay. So now if we take a look at it, what we're focusing on is the bottom portion of the screen out here. The upper portion is obviously, you know, where the index is at right now. What I want to show you is if we take a look at the price oscillator for the McClellan price oscillator for all three of these indices. Now, this is going to have a whole heck of a lot more meaning at the close versus, you know, 10:35 in the morning. But right now what we can see is New York Stock Exchange on the left-hand side. price oscillator is above zero. When it's above zero, says that the buyers have control. So the real question now, the New York Stock Exchange was above zero yesterday, closed above zero yesterday. You really need to see what happens on the next trading session and what are the buyers able to do. Well, this stage here, they've done pretty well. They've been able to continue to advance that move higher out here. If we take a look at the NASDAQ composite, it had not cleared the zero line yesterday. That's this green horizontal line at the bottom of my screen out here. Still don't have everything lined up, but that's okay. Good enough. And if we take a look at the composite where it's trading at right now, so the NASDAQ composite, a wider swath than the NDX 100, it is above the zero line. When things are above the zero line, it's giving you more reasons to be long and less reasons to be short out there. That doesn't mean that you're not going to sell a top, some other pattern or what have you. But just, again, with regard to its message of the market, and the same thing now with the Dow, is that buyers are absolutely in control. It all depends how things close today. But I can tell you across the board, all three of these indices, they're in bullish territory, utilizing the summation index. McClellan oscillator, price oscillator, is one of the key elements in creating that summation index. Something else that is worth noting out here that often gets overlooked, in fact, mostly gets overlooked, is this chart here. And this chart, what I'm showing, this happens to be the New York Stock Exchange as well, but what I'm showing you in the bottom portion of the chart here is the advanced decline line for the New York Stock Exchange. So now this is the wider swath of the market. I mentioned this during the first hour of the show, and I figured I would come in and actually show you a current chart where we're at right now. Now, what I want to show you is if you take a look right back here where my cursor is at, that was last week. And what I want to show you is even though this market has been chopping around, which is what it has been doing, and it's been chopping around to a certain extent between October 31st, at its lows, which is really what yesterday was doing, was testing that area, and the highs from the end of December out here. It's been shopping around. But while it's been shopping around, what's really been going on underneath the covers of the market inside the New York Stock Exchange, the wider swath of the market, is that it's been actually making higher highs on its advanced decline line. Go back, if you want. Go take a look at the advanced decline line. Go back as far as you can and find me a bull market that has ended when the New York Stock Exchange, when the advanced decline line was making its highs out here, and because you will find you won't find those. You just don't find those. And that's what we had that took place here last week. I don't remember if it's Monday, but that's what actually took place last week. Now, with the market moving higher today and yesterday, have we seen those highs taken out yet? No, we haven't. When highs get formed inside the New York Stock Exchange, when there's tops of any significance, what happens is in the advanced decline line, you have it moving lower, just like we did back here in December. You see, it had made a higher high back in November than a lower high back in December. Yet if I were to really take a look at the market inside the New York Stock Exchange, I won't show you on this, I'll show you back here on this chart out here. What was really going on back in December as the highs were being made was what we were seeing or back at the end of November is what I should say, inside the New York Stock Exchange. It was making a higher high while the advanced decline line was making a lower high. That's a type of bearish divergence that exists, but that is not what is in place as we speak right now. The New York Stock Exchange is not making higher highs. It hasn't made it back to the highs from December 29th. It hasn't made it back to the highs from November 25th. But what it is telling you is that underneath the covers, and this is where it often gets overlooked, is that this is not confirming any kind of significant with the market, with the New York Stock Exchange having made a higher high in its advanced decline line. It would be extremely unusual for this to have then been the high out here, the high being this past December. So what do we know about the markets? Hey, we're in this choppy move out here. Something else for us to focus on and pay attention. Certainly, it's going to be the VIX index out there. Now, with regard to where it's trading at today, inside the VIX index is trading out at 1845. A key level for it is going to be its 50-day exponential moving average, 1765. And if you'd really like to master and really like to understand the VIX index, to understand how you can use this, not as it is in this plain vanilla shape out here, but another way that I'll teach you how to use it. You can use it to help to identify significant bottoms. You can use it to identify what I'll call more impending tops. It's a little bit, there's a little bit more to it. Yeah, it will teach you you how to identify when the markets are going to bounce within 48 hours, when they're going to pull back in that same time period, when to be long, when to be short in the market. So the people refer to this as a VIX indicator. I think it's almost better a liquidity gauge, but really there's excellent trading tools that are contained within this. I'm going to do a special workshop next Wednesday at TFNN. It's going to be from 5:30, probably an hour, maybe less than an hour out there with some, and it's available to all my subscribers. Now, you have access to become a subscriber. Anyone can become a subscriber. You just go over to the homepage of TFNN.com. You can sign up. It's over on the left-hand side. It's a free trial newsletter, so it's a piece of cake. Easy to do out there. So come on and join me next Wednesday, and I'll share with you some extraordinary tools that really I don't share with you on the air here. These are tools that you want to have inside of your trading arsenal out there. I would love to see you. Now, let's take a look at some things here that are, let's go take a look at what's going on inside of, what have we not looked at here? So gold's back $16. Let's put gold back up on our chart out here. And the interesting thing about gold is going to be, and here's where, let me put it back, this chart back here, the full moon chart. So today is a full moon, and a full moon's inside of gold. Let me turn a couple things off here. Let me do this. I did this yesterday, but let me just share this with you. Let me turn that off. Let me turn that off. Let me turn that off. There we go. Okay, good. All right. So today is the full moon. It takes place this evening. Shoot, I'd have to go back in the Tiger's Den archive around 5:10 or 5:40, sometime between 5 and 6 tonight. That's close enough. Is when the actual full moon comes in. Does it really matter with regard to this chart? No, it does not. I'm going to go ahead and put a line out here, though, so I don't have to do this work later. Come on, punch up on my screen for me, would you? Do that, would you? So what's the deal there? There we go. Okay. At this stage here, what we know, and this really won't know till tomorrow or the next day, is what tends to happen on full moons inside of gold is that they become initiation moves. It is the most amazing thing. Give me a moment here to get something else on my screen. Okay. What is amazing here, and take a look at, so I've identified for you the white lines, the white arrows, really what I should say on my screen, not white lines because I've got cursors out there, my crosshair. But if you take a look at those white arrows on my screen, full moons tend to form initiation moves out here. They last for several days. They last for long periods of time. If you take a look at the last initiation move we had, well, January 5th. Was it associated with a full moon? I don't know if it was or it wasn't. You want me to try to explain to you why it happens? I can't, and I'm not going to. What I do know is that when we place these identifiers on a chart out here, what we can see is they're really good, useful tools. You know, there's a lot of, it's just like rainbows. How many of you believe that rainbows exist? Everybody. But if I ask you to go step outside right now and look for a rainbow, can you see it? No. Is seeing believing out there? No. Knowing, and that's really when it takes a look at, there are nuances within a stock chart. All you need for a rainbow is the sun in the right direction, some small prismatic droplets of mist out there, and you can see a rainbow. But the rainbow's out there because all it needed was a couple of elements. Well, in the case of the gold chart out here, I can't tell you why, I just know that it does. Full moon days tend to be an initiation move. Now, I don't know whether to put the arrow at the top or the bottom out here. I just put it at the top as we speak right now. There is evidence out here to support that gold wants to pull back. That evidence being the positions that the large commercial traders have taken as a percentage of the net open of their percentage of open interest, their net short position as a percentage of open interest. It's high. It's as high as it's been in a long period of time. So if gold, having just made this nice move to the upside, if everybody believed that the real bottom was in, everybody, who's that everybody? Let's just call it the big money, the smart money, the large commercial traders. Why would they have upped their ante out here? That's the thing that is perplexing. Is this pattern here that identifies this initiation move is going to work this time as it has in the past? This is just going back like a year or so out here. That I don't know. Anything can fail out here. But what you want to do is not so much, today's action says it's pushing lower. Is it tomorrow's move that we really see where it reverses and moves higher? I don't know the answer to that. I do know that over the course of the next couple of days, it is something worth paying attention to. It's really worth paying attention to because of the direct correlation that gold has with regard to the mining equities out here. Now, if we take a look at retracement levels inside of gold, so far all that it's had off of that last bottom out here back on January 2nd has been about a 0.382 retracement. That's really not the bottom that you ought to use for your retracement. Really ought to come all the way back to the lows of November 7th to the highs out here. So at this stage, we can say, hey, hasn't even done a 0.382 retracement level inside of gold. But if we do take a look at this channel line, here's your daily channel line. You know what? And this is in a descending price channel. In order for gold to really break out to the upside here, so this is kind of cool, putting together the initiation move with this full moon, here's what we ought to see. If the full moon that we're taking a look at today or the other initiation moves, we ought to see if gold's going to move topside, we ought to see a break of this descending price channel. So that's the cool thing about putting together a couple of tools like this. That's what I think that everyone should be focusing on as well. But I think really focused on is probably an easier thing for both you and me. So that is something to focus on with regard to gold. Reason being, because it's going to have a direct correlation to what goes on inside those mining equities. And speaking of mining equities, let's go take a look at a couple of them. Let's go see what their message might be. Let's go take a look at Gold Corp out here. GG, the number one weighting inside of the GDX out here. This is the daily chart for Gold Corp. What has it done? Well, if we take a look at retracements from high to low, that would take us back from the August 14th level down to the low out here. This is back on October 31st. We know it's made a 0.618 retracement. You know, when things make a 0.618 retracement, that can often be their point where they're going to turn and maybe even form an A to B equals CD. In this case here, it could be an A to B equals CD to the downside. I'm not saying that's what's going to take place. A 0.618 retracement is also a natural resting spot out here. But what I can tell you is it would be unusual for the mining equities to trade in the opposite direction of gold out here. So I think that today, tomorrow is really an important trading session for anybody that is trading either the mining equities or the metals out there. And I just simply judge. I'm just simply jury. I'm just simply going to have to rest my case. At this stage here, we see the Gold Corp had gap down, just an inside trading session as we speak. So far, volume today, 2.9 million shares. You know, it made a high out here recently with about 16 million shares. Tried yesterday to move up into it with a lot less volume, half of the volume, 8 million shares versus the last time up there was 16 million shares. Not enough energy. Today is just a pause button. That candle session today, all that it means is it's just simply a pause button. So Gold Corp not giving you any signal, certainly to the downside out here. If we take a look at Gold Corp, GOLD is the ticker symbol. This is trading out at $83.59. Let's go see what this thing has been doing. Today's volume on this, 309,000 shares. Of course, it was trying to push up earlier in the day into the January 30th swing point. That had 964,000 shares. So you got pretty decent volume pushing into that. But at this stage, it is a rejection of that swing point. Any close below 83.68 would be at least a rejection of the swing point low. Volume-wise, 309,000 shares in an hour and 15 minutes or so of trading out here. So it's got volume. I still say it's kind of pushing into that level with some volume out there. Dow's up 166. S&P is up 11. Composites up 3 points right now. Russell 2000 up 11 points. Looks like the ES Mini trading out of that 2026 level. You actually trade out 2027. That's going to be the key level for each of us to be watching throughout the day. It's been tested 2026 from the bullish side. What you want to see is you want to see that 2026 level get tested, get rejected. We've seen 202.550 while we've been on the air during this 1 hour segment. You want to see that level hold as support. If it fails as support, then you've got a little bit of a failed breakout inside of the ES Mini out here. And that's what's going on inside of that. Anything else? Let me see. Anything else of significance that shows up on my screen out here? Not really anything. So we'll simply go ahead and play music during the last segment here. No, I'm just kidding. I'll come back. We'll take a look at it. We'll find something to take a look at. Or you can give me a call at 877-927-6648. Hey, during this segment, go on over. Homepage at TFNN.com. Sign up for next Wednesday's workshop. Look forward to seeing you there. Take care. We'll be right back, though.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Hey, I trudged through so many stock charts during the break. Just kidding. Looking for something to talk about. I think one of the things we need to talk about is the FTSE out here in the UK. Now, it's got a nice wide-ranging bar as we speak right now, coming into an area of resistance. That resistance was set up back here. These 3 trading sessions was set up by a little doji high back there on September the 4th. That high is 6904.86. You've got the FTSE back above its 2,000 2007 highs. That's a long-term consolidation pattern that was out there. We've seen a couple attempts for the FTSE to get above that level. 69.0486 is going to be really key because any close above that, and this pattern out here looks so much like the Russell 2000. Russell 2000 not back at those highs just yet, but if we get the FTSE to break above the 69.04 level, that bodes well for the bulls, not the bears, to the extent that you believe that this is kind of like a connected world when it comes to markets out here, somewhat connected. So that's what's going on inside of the FTSE. I also noticed that the in the QQQ ETF, it was basically flat on the day. So if we take a look at the top 10 holdings, no wonder. That's me. It's 10, 1, 2, 3, 4, 5, 6, 7, 8, 9. It's 9. If we take a look, I think Google's in there twice. Hey, what the heck's up with that? If we take a look at the top 10 holdings, top 9 holdings, I should say, they're all negative. So no wonder there is pressure inside of the NDX 100. You got Apple is down 46 cents. Microsoft is off 3 pennies. Google's off $5. Facebook's down $1. Intel's off 10 cents. Gilead is down $1.20. Amazon's off $1.58. Cisco's off 14. Amgen down 247. Those were the top 9. Maybe as of a couple of weeks ago. There may have been some change out there. But nonetheless, that is why you're seeing the Qs themselves struggling. If we go take a look at Apple, though, see what it is actually doing out here. What we know about Apple is has it gotten above? No, it has not crossed its B point, the 119.75 here just yet. 68 million shares on that swing point. Price moved up with 83 million shares back on January 30th. Yesterday, a move of 62 million going into 68 million shares, still pretty decent volume. So Apple really not giving us any sense of doing anything other than building cause to probably bust through that 119.75, setting up an A to B equals CD that ought to take it to the 129.20 level out there. That is the current message inside of Apple. If we go take a look at Microsoft down 5 cents right now. I believe we had a caller last week or the week before. He was asking, hey, where's a good entry price inside of Microsoft? I think I said it was in the $40 area, if I'm not mistaken. Let me see if we can go put that trend line. We were looking at a trend line inside of Microsoft. I believe that might have been one of the things that had given us that price projection. Well, I don't even know what a ray line is. Let's try red line out here. I was coming off of these lows back here in 2013, and yeah, there it is. So Microsoft has gotten down to that level, but with big volume out here. Volume last week was 437 million shares out there. Nonetheless, this may have found some support at that trend line. If we go take a look at what else is moving inside of the NDX one, let's look at one of the let's look at Gilead Sciences. GILD is the ticker symbol. See what it is doing out here. This had completed an A to B equals CD pattern, made its way all the way back to the gap up. It closed that window. That was the trading session from December 19th to the 22nd when it had gapped down with 72 million shares. It got up into that level with only 10 million shares. How about that? So it's up with real light volume. Does that mean that it can't move higher? No. It's got resistance, though. And that resistance, TAS market profile 106.70. So, folks, it is Terrific Tuesday. Hey, get over to the homepage of TFNN.com. Sign up for I want to spend time with you next Wednesday, share with you extraordinary tools when it comes to the VIX index. I want to teach you how to turn what some people call fear into gifts. Gifts that keep on giving. Take care, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his Opening Call newsletter. Right now, you can get a 2-week free trial to the Opening Call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.